You can support this podcast for $3 a month at patreon.com/copytradersclub. And you can follow me on eToro, username Gavin Macaulay. On with the show. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. Today we talk to one of the fastest rising stars on eToro, for whom 2022 has been his time to shine. Here we go. Season 2, Episode 25 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor, and reveal more about them than anywhere else, so you can assess whether they might suit you. In this episode, we talk to Ingvar Rueckemann, aka Ingruc, who has gone from obscurity to being a high-profile elite PI in a matter of a few months. I can see him stepping out of the limousine and admiring the palatial exterior of the Copytraders Clubhouse. Here he is. Ingvar, hallo, willkommen im Copytraders Club.
Danke.
Bitte. And in order to get past security and into the inner sanctum, I need to ask you a series of quickfire questions, okay?
Okay.
Username on eToro.
Ingruc.
Date you joined eToro.
August 2020.
Date you became a popular investor.
March 2021.
Year of birth.
1990.
Place of residence.
Stockholm, Sweden.
Profession.
Full-time investor.
Briefly state what you aim to achieve on eToro.
Manage a stock portfolio that beats the market.
Name one of your investing heroes.
Warren Buffett.
Name one of your favorite investing books.
Stocks for the Long Run by Jeremy Siegel.
That completes the formalities. Let's proceed now into our VIP section here at the Copytraders Clubhouse, the much sought after inner sanctum that is the Copytraders Lounge. Ingvar Rueckemann, aka Ingruc, are you ready for this magical transition?
I am.
Okay, come on through here, Ingvar. You take a seat here on the sofa. Can I get you a little schnapps or something?
Water is fine, thank you.
Oh, very good. Okay, so Ingvar Rueckemann. Please pronounce your surname for me properly in the German way.
Ingvar Rueckemann. So you were pretty close.
Thank you. So you're a German happily living, as you say in your bio, in Sweden. Now, what's going on there? Because Ingvar is a Scandinavian name associated with soldiers and war. Famous Ingvars include a former king of Sweden, the founder of IKEA, Ingvar Kamprad, and a famous sports reporter who died earlier this year, Ingvar Oldsberg. Do you know all those Ingvars?
One of them at least, the founder of IKEA, that has been brought to my attention before. The other ones were new to me.
So you're not just a German living in Sweden, you have Swedish roots of some sort?
I don't.
It's coincidental?
It is really coincidental, yeah, 100%. There is no prior association of my family to Sweden. I just happen to have a Swedish first name, and I happen to live in Sweden now.
Wow, I wonder, is that a case of something akin to what's called nominative determinism, where your name results in some aspect of your life. If you're called Jonathan Butcher, you end up being a butcher.
It seems like it.
Because you have a Swedish name, you ended up in Sweden.
That is probably true.
Have you always been interested in Sweden because of your name?
Not very much, to be quite honest. It is just that by now 7 years ago, my job at that time brought me to Sweden, and that led afterwards to me moving to Sweden.
Okay, so nothing more mysterious than that. Wasn't the universe at work?
Maybe. It works in mysterious ways, I am being told.
Okay, so you're a full-time trader, an investor.
Correct.
Does that mean on eToro and elsewhere?
It means at the moment a lot on eToro. I do manage, of course, also my own funds, but eToro is, of course, one of the main occupations these days.
You previously worked as an asset and project manager in commercial real estate. Master's degree from Erasmus University, Netherlands. What was your master's degree in?
So my master's degree was essentially a business degree, a master's in strategic management. And that afterwards led me to my first job, which was with a real estate developer, basically working with shopping centers. So it's a big company which builds and manages shopping centers. And I was an asset manager and project manager at that company, which really, if you put it on a broad scale, has to do with, together with the teams on site, managing the budget, fulfilling the budget, and trying to achieve the strategic development for the assets for the future.
What was it like studying at Erasmus University?
It was great. I studied in total almost 4 years in the Netherlands. So that was essentially my first real experience of staying abroad. So I moved from Germany to the Netherlands. I studied first in Maastricht, which is in the south of the Netherlands. And then afterwards, for my master's degree, I went to Rotterdam. And I really enjoyed that. I really started to enjoy being abroad, connecting with people from other countries. That is really the first time I actually had that opportunity to do so on a bigger scale.
And were you studying in Dutch?
No, everything was in English.
Did you pick up Dutch when you were there?
I did, yes. I could have probably picked up more Dutch. I was reasonably satisfied with the level of Dutch I had after 4 years, but I have to admit that by now that has probably been replaced quite a bit by Swedish.
So you're a German who grew up in Germany and has
Correct.
lived in the Netherlands and now lives in Sweden. You're a very European dude.
I like to think so.
Do you feel like a proud European?
I do. I think that probably comes with me having lived in those 3 countries, which you just mentioned, Germany, the Netherlands, and Sweden. You really appreciate the, say, particularities of every country. And it's, in my opinion, very nice to be able to take some elements of all these cultures.
One thing I wanted to ask is, are you currently on holiday?
I am. I am spending some quiet weeks in the countryside.
You mean you're out camping in the Swedish forest?
I am in the Swedish forest. It is a bit nicer than just camping, but it is, you could say, rustic.
Very nice. Okay, so I always ask the question, how did I come across the guest? I think the answer is simply your rise to prominence over the past maybe 6 months. You've been kind of hard to avoid. You're one of these names. I suppose you could call them the new kids on the block, or the new wave of popular investors attracting interest. Exciting times for you?
Absolutely, yeah. That it has indeed been a wild ride since the beginning of this year. And indeed, there was a very large increase in the number of followers and copiers, which I am, of course, very happy to see.
We'll go into that in a little bit more detail later. For now, let the listener find out a bit more about you, Ingvar, by telling us something you're very bad at.
Okay. I am being told by people close to me that I have a tendency to become a little bit grumpy when I'm hungry. So you could say that my worst habit is probably not packing snacks when I should have.
Well, it's very natural to be in a bad mood when you're hungry. There's a word for that, isn't there? An annoying word. You familiar with it in English?
I heard the word hangry before.
That's what I'm referring to. I'm hangry. Okay, let's have a question from the art of people. If you could choose a number between 1 and 10 that isn't 7.
4.
What's the most exciting thing in your professional life right now?
That is being on eToro. Because being on eToro, it's a new chapter in my professional life, and I really enjoy being out in the open, talking about investments, because that is something I'm personally very passionate about, and I think it's fantastic that I have this opportunity to share my passion with other people.
Okay, Ingvar, let's have a look at your profile on eToro, and let's begin, as is customary, with the bio. Can I ask you to read a little bit of your bio from long-term strategy down to limited risk?
Of course, yeah. So what I'm doing on eToro is I am managing a portfolio which has a long-term strategy, and I try to pick undervalued stocks from both the value segment and also from growth if they come at the right price. I don't employ any leverage. I don't do any shorts. So it is really just a long-only stock portfolio. And what I want to achieve with this portfolio is to outperform the main European and American indices over a multi-year time horizon with a consistent strategy and limited risk.
Okay, so undervalued stocks from value and growth, you say? At heart, are you a value investor?
I think I am, yes. At heart, I am probably more of a value investor than a growth investor. That is really the approach which, for me personally, makes most sense. So what I like to do is really to go into stocks. I like to research them in detail. And in the end, before I make a investment decision, I really like to make sure that I feel completely fine with the financials which I have seen. And sometimes that works for growth stocks as well. But I believe, especially in the last couple of years, with the typical growth stocks which we have seen on the market, there is always the one key variable is the growth rate. And if that is just something which I'm assuming for myself without any guidance from the company or any commitment from the company to that growth rate, that is really just something which could be pretty much anything, whatever I believe is reasonable. So I believe it is, if you're being honest to yourself as an investor, I believe it is much better to go for the actual figures which are already being produced by the company. That pushes me a bit more into the value direction, because I can really go deep into the analysis and justify the financial decision for myself.
Yeah, and your hero, Warren Buffett, does talk about how good growth investing is value investing as well, doesn't he?
Yes. Warren Buffett, probably the biggest value investor of them all. As I mentioned before, he is really one of my investment heroes, if you can call it that way. And that is probably something which many people are saying. I have to say, though, it goes a bit beyond just the investment which he has been doing in his life. It is also to understand what has been behind those investments. How does that person first of all, achieve the rates, the performance which he has achieved over his life. And then also to look at how has he come to the conclusions to buy a certain stock and why were certain stocks sold at other points in time. And there is really many small details if you really go through the literature which has been written about him and also by him over the years, where you can really find, I believe almost everybody can find something very interesting for their own investment philosophy.
And your goal is to outperform the main European and American indices over a multi-year horizon with a consistent strategy and limited risk. Now, I like the way you phrased that. I believe that it's your aim, but it's also what you avoid by phrasing it that way is people being able to point at a single year and say you're down against your benchmark.
Yeah. And generally speaking, when looking at performance, I believe it is now widely known by many people that it is actually quite hard to outperform the indices. So most active managers, which then of course I need to count myself as well, active manager, they do not outperform the indices over time, simply because it is very hard and the market in the end determines your returns. I believe the way I am investing, it will be possible to outperform the markets. That is also the ambition which I have for myself, because otherwise I don't even have to invest at all. That for me does not mean that every year has to outperform the index. That was, for example, not the case last year. If I look at my 2021 figures, I did not outperform the S&P 500. I think the S&P was around 27% plus. I was at, I think, 22% plus. So there is a gap where I'm behind the S&P. But I think that applied to pretty much, or to many other people as well. They did not outperform the S&P 500 because the performance was just so staggering. And therefore, I believe it's very important to see it's really over a multi-year horizon to see, okay, what is the compound annual growth rate over a reasonably long time horizon. And we see that actually this year, in 2022, that is, of course, one of the reasons why the portfolio has been so popular during the last 6 months, because the portfolio has held up quite well versus the market. And then you can see, if you now look back at the last 18, 19 months, that the performance is, in fact, at least at par and probably even a bit better.
Okay, well, let's talk exactly about that, your results over the past few years and months. Let me describe to the listener. Okay, so as you said, you started in August 2020, so 5 months of 2020 resulted in a 20.84% annual figure. Then the whole of 2021, as you said, 22.5%. And 2022, year to date, you're currently up 4.2%. Now, as you alluded to there, a lot of your success has come from recent performance. You've actually been on eToro for a very short time, and your results at first glance, if you'll forgive me for saying, don't jump out as being incredibly exciting. Okay, so let's drill into that and work out what's been going on. The key period for you, I would suggest, started in December of last year, December 2021 to March 2022. In December, you had a monthly return of 6.68%, which brought your annual result up out of the teens somewhere to that 22.5 figure, giving you two annual results of over 20% to the quick glance copier, which is 99% of copiers. Then your good form continued into the first 3 months of 2022. So in that period, when other PIs, particularly tech and crypto-heavy ones, were struggling, you managed to do okay and stay in green, which copiers love. Is that a fair summary of the story so far, or is there anything you'd like to correct or add to that?
I think that is a fair assessment of the situation. Yeah. So the way I invest is, of course, a bit more focused on the value part of the investment spectrum. And as such, because we all know that especially in the first quarter, the tech stocks and growthy stocks got really punished on the market. That is something where value really started to shine. For me, that period is not over yet. I believe that there is more pressure for growth to come, and that probably means a bit more support for value stocks, for stocks which are actually generating very good free cash flow at the moment. For me, that is more of a timeless investment strategy anyway. And I think right now is the time where value is really outperforming versus tech. And I think there is a bit more to come in the next couple of months. And as such, you did indeed see the, say, outperformance from December until March. Then the second quarter was a bit weaker also for my portfolio. That is correct.
As we mentioned earlier, the name Ingvar is associated with war, and certainly your considerable sized energy stocks got a boost from the geopolitical situation. Wasn't the only thing that did well, also healthcare and consumer staples, which are, I suppose, more value plays, did well in this period. So would it be fair to say your results before December 2020 were okay, nothing special, but then the fact that you simply kept your head above water during a choppy quarter was enough to bring thousands of copiers who had jumped ship from red copies, scrambling to pull themselves into the lifeboat Ingruc?
Yes, in the end, you can probably see a certain trend there. I don't know where the copiers came from in the end. I think in my impression, or the way I perceive it, is that many of the people who are copying my portfolio have actually only signed up to eToro during 2022. So I'm not sure if really there are many people who are coming from other popular investors. I don't have the figures to support any of those theses. So it is really just my impression, which I overall get. And if you look at the performance, indeed, you are right. That is something which I also put out in my half-year review a couple of weeks ago, that indeed one of the main drivers of the portfolio during 2022 was indeed Shell, which is the oil company, oil and gas company, to be precise. And that is something which is, of course, connected to the geopolitical events. So what I also found, and that was really very interesting looking at the analysis of my portfolio, is that it was not really outsized the way Shell performed. So of course it was a strong contributor, but as you alluded to, there were also other stocks which performed quite well, notably from healthcare and consumer staples, which are really classic. You can almost call it safe havens in situations like these, where people are uncertain about growth prospects in particular. They go to these stocks, which are reliably generating cash flow since many, many years. And in that sense, those stocks have, of course, also contributed to the stable or even good performance of the portfolio during this year. And even if you look at the remaining stocks, there were really no stocks which had a tremendous underperformance. So I did not have these stocks which were dragging down the portfolio like crazy. It was really quite stable over the entire spectrum of my portfolio, which is something I really appreciated to see.
Yes, very well done. And very well done for having risen so far up the PI ladder. Do you find it hard to believe that you've achieved such success so quickly and seemingly easily on eToro?
It is quite stunning. If I look back at, say, 7 or 8 months from now, there was a point where there were, I think, 150 copiers, which I was very happy to have, of course. And I think I kept a good exchange with them. And then things, of course, went a bit gangbusters, basically January and February. That is really when everything started, when the market overall went into turmoil. Then my portfolio seemed quite well in comparison. Yeah, and if you look back, it is, of course, it's a tremendous growth rate. That is really something which you also have to realize sometimes in your own head, that it really went from, say, 150 copiers to by now close to 5,000. That is really something. You mentioned the word easy, which I don't think captures the essence of it, and you probably said it on purpose a little bit, because in the end, it is not just easy. Of course, the first thing comes with building that portfolio and having the confidence into your portfolio that it will perform well over time. There was a period, for example, last summer where the portfolio was clearly lagging behind the market. So that is something where you have to manage through those phases by still believing in your strategy and believing that it will perform good results over time. And then, of course, there is the opposite, like in the first half of this year, where the portfolio is performing much better than the indices. The next challenge, which comes with eToro, is, of course, to keep people informed about what you are doing. Because there are also times, and you see that in the figures as well during June, for example, when the portfolio performed pretty much just like the market, which was not very enjoyable for anybody. So it was, I think, -7, -8%. And that is never a great period for an investor because, of course, there is questions. Do I have the right allocation? Do I have the right stock picks? Am I maybe overexposed to something? These phases are good because you really have to check for yourself, am I still on the right track? For me, the answer was clearly yes, because everything seemed right the way I wanted it to be. And then the challenge, of course, comes a bit with the territory. I mentioned previously that I am really passionate about investments, and I'm very happy about sharing my opinions and analyses on eToro with other people and answering questions. That is really something I very much enjoy. And then in these times, like June, for example, the going gets a bit tougher because, of course, people are asking those questions. Maybe somebody just started copying in May, and then all of a sudden they're down 8%, which never feels great within the time span of 1 month. And then, of course, they are rightfully asking questions. What is going on? Do you feel concerned? Should I feel concerned? And that is, of course, more of an exercise in how to communicate, to make sure that people also share the same understanding as I do for the portfolio, so that they have at least the best basis for making their decisions. Somebody might still decide, okay, this is not for me. I do not want this kind of exposure, and that's absolutely fine. But then if I communicate effectively, if I communicate what I am doing, then people at least have the right understanding, the right frame of reference, and then can decide based on a decent amount of facts if they want that exposure or not.
In your bio, you reference a consistent strategy and limited risk. You've just spoken there about your consistent strategy. Your risk prior to all the turmoil was average and max 3, and has obviously crept up a little bit in recent months, as has everyone's. Most recently, you're at average and max 5, but that's still quite under control in relative terms. Are you happy enough with your risk score?
I am, yes. I think the risk score is fair given the market environment and given the composition of the portfolio. For me, it's quite natural that the risk score through the board, also with other popular investors, is simply higher this year. We see that in the indices, so it is really not a surprise to see that also in the portfolio. There is another thing which is not really monitored by the statistics on eToro, but the percentage invested also is quite important for the calculation of the risk score. And that is something in 2021, I had a relatively large cash proportion during the year. It was sometimes 30, sometimes even 40% because of my expectations of the market. And that, of course, reduces the risk score because whenever you are, say, only 60% invested and the market goes down, you are usually losing less than the market. So the risk score, it will not be off the charts. That is something which has also changed this year because I have actually used the first 6 months of the year to commit the remaining cash reserves in the portfolio so that it's by now, I believe, 93% invested. So that is something which by itself simply already contributes to a little bit higher risk score. And then again, we also have the current market environment. So considering the market environment together with the portfolio being pretty much fully invested, I believe a risk score of 5 is absolutely fine for me.
Copier numbers and assets under copy. Copier numbers as of the time of recording, 4,870. And assets under copy, not far under 5 million, according to the fact sheet. So a couple of questions about that. Number one, I'm looking at your copier graph, and it's a story of a rise to prominence. How many times was that assisted by appearing on the Discover page?
I have to think back because I'm not really in control of that. So sometimes I pop up picked by some of the algorithms, I guess. And I have asked the Itara team as well when that happens. And the answer I get is it's an algorithm. It depends on parameters. And it is maybe a bit of a surprise for me as a popular investor. A good one, of course, and a welcome one. There were a couple of other things. I believe I got featured in Editor's Choice for quite a while. That must have been several weeks. I can't tell exactly when the time frame was, but that was for sure during the time when the portfolio was performing very well compared with the rest of the portfolios and the broader market. That has definitely helped to attract copiers because I believe copiers look a lot on the discovery page. And if you're on the top of that page, that obviously increases your number of appearances in people's feeds.
And when did you do the CISI level 3 exam?
I did that about 1 year ago.
Oh, a long time ago. Was that just to prepare the way for your quest for world domination, or I mean, you didn't want to wait to do that until it was necessary? You thought, may as well get this done now so that there's no roadblocks?
Exactly that, yeah. So I could see during 2021 that the portfolio is going into the right direction. I am also enjoying doing this. And if I would like to be upgraded to the elite tier, then one of the requirements is to have the CISI level 3 qualification. And to be honest, also for me personally, that was actually a great addition because you learn all these things from reading books, from reading online, from educating yourself on the markets. But it's always good to have something which is really formally written in a book by a qualified institution. So either way, I'm actually very happy that this requirement exists. First of all, because it adds trust to the popular investor program. But also for me personally, it was actually a nice challenge because you realize, okay, when I read these books, many of those things I know, I have heard them before, but there is this one little element which I didn't really think about before, but you only find it out because you're reading literature about it. And that is something which I really enjoyed. And then, of course, the nice side effect is also that it's a requirement for the elite tier. And that for me just made sense to do well ahead of time.
So you didn't find the studying process difficult or anything? You found it enjoyable and edifying?
Yes, definitely. I did enjoy it. I have to say, of course, when you study for any kind of exam, there is always these, say, last 5 or 10% where you just need to focus on details which you maybe would not have internalized as much if you had just read it for enjoyment. But overall, 90% of the experience of studying, it takes time, but it's totally worth it.
Well, the good thing about doing it that way is there was no delay for you to progress onto elite. It was very smooth. You got there as soon as your assets under copier numbers were sufficient. Often, I think people, when they join the PI scheme, they just wait and see, whether there's going to be enough traction. And then suddenly they think, oh, now I have to become an elite quickly. Got to do that exam. And there's a build-up of copiers and you're not getting the rewards for that.
That's exactly true. In my opinion, it's always good to fulfill the things which you can control yourself. And that is, of course, one of those things. And as I say, I believe it's a very good qualification for the popular investor program because it adds trust of the copiers into their popular investors. But it also takes time, of course. It takes time to study the books. It takes time to sign up for the exams themselves. So I believe that is really one of the things which should be tackled as soon as somebody feels that they are on track to being upgraded to those tiers.
Let's talk about communication. If we can focus on your morning briefs, and I don't mean the underpants you slip into as you spring out of bed. You do a thing in eToro which you call your morning brief, your little summary post. How often do you try and get those out?
The morning briefs, they are something which I started in the end of January this year, which coincided very much with the growth of copiers. And at that time, if you remember, and I'm sure you do, the markets were in quite the turmoil. And I figured considering also that there is so many people copying my portfolio, it is good to give people a bit of a context, at least of how I'm thinking and what is currently going on in the market. Because for me, myself, it is very obvious that I read Bloomberg and Financial Times, Wall Street Journal. I read those things every day. So for me, it's natural that I just kind of know what is going on in the markets. But I, of course, also understand that this might not be the same for somebody who is copying my portfolio. And especially in times when emotions run high, such as in the beginning of this year and sometimes afterwards as well, I felt it was good to give people just my summary every morning, because I go through the news anyway, and then I might as well just share a condensed version with the people.
Is there not a danger that providing such frequent commentary runs contrary to your stated aim of trying to engender for yourself and with your copiers a long-term strategy? Are you not creating too much of a constant feed of info that makes it difficult for somebody to have a long-term view?
Yeah, I see why that might be a, say, concern. I think, though, that it goes very well together, because you can still be invested for the long term and at the same time follow the markets on a daily basis. Because the way I try to keep those morning briefs is really quite, say, objective. Of course, sometimes a bit with my own, say, coloring of what is currently going on. But in general, I really try to keep it to the facts on the ground. What is currently going on in the world? Should I be concerned about investing or not? And generally, my statement is also that we anyway invest for the long term. That is what I do here in this portfolio. And therefore, see those things which are currently happening in context to the broader happenings in the world. And if you're investing for the long term, most of these things which are happening on a daily basis should not concern you too much. But on the other hand, it also doesn't hurt to know what's currently going on. Because like this, you really remove uncertainty for people. And I think that is very important, especially when we're looking at eToro, where I believe many people are just starting out on their investment journey. So I'd rather inform people that they know, okay, somebody is taking care of the portfolio, somebody knows what's going on. At the same time, Ingvar is telling me every month, every 3 months, every other week that he is investing for the long term, and he doesn't seem too concerned about what is going on any given day. So it's probably fine.
You're also on LinkedIn and Twitter. I saw you on Twitter recently posting a question slightly removed from what we're talking about. And that question is, what's the danger of a world without beauty?
That's a good one, actually. First of all, I'm not too active on Twitter, which is probably also what you saw on my Twitter account. But I do check it regularly. So every other day, I would say. And sometimes there are things which I find interesting which do not have to do with investing. Surprising, but yeah, that's the case. And one of them, I think what you're referring to is something called the cultural tutor. I think that is something which it goes to. And that account, I found it very intriguing, because that account really speaks about, say, arts in the world and about beauty in the world. And that really got me thinking, because by now there is so much standardization happening in the world. If you, for example, watch any given series on TV, you always think your own phone is ringing because everybody has the same ringtone, right? So that is something where standardization fulfills some purpose. I guess when everybody has an iPhone, it's easy to connect, easy to share files. So I understand that. When you look at, for example, architecture, completely different aspect of society, there standardization is maybe not the way to go forward. So I found that example, which that account made quite interesting, which was going into the direction of education. Would you rather go to this concrete building to go to your high school, or would you feel more inspired to do well in school or to come to school if it is very old, very nice architecture? You know, these kind of questions, they really got me thinking, yes, actually there is a tremendous value to those things. And maybe that is something which sometimes disappears these days in the standardization, commoditization of so many things. So I found that quite inspiring, and that is why I'm following this account.
Do you copy?
Do you copy?
Do you copy?
Do you copy? Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Okay, Ingvar, it's time to get into your portfolio now. If I can paint a picture in a world where beauty does matter to the listener about your portfolio. Asset class allocation, all stocks. That's easy. 100% stocks, no bonds, commodities, hedges, anything like that.
Indeed, the portfolio is stocks only. That is my basic principle when investing. I like to keep things simple. I believe that makes a lot of sense. There is so many crazy derivatives which you can trade with these days, and I believe all you really need for at least part of your personal portfolio is a solid stock investment. And that is also how I like to manage the eToro account.
You've got 17 positions. That's relatively small for eToro. So what does diversification mean to you, and how is that evidenced in your portfolio?
I like to call my portfolio concentrated yet diversified. So there are some positions which are quite large. If you look at them, they are currently 13% and 10%. Those are the top two positions in my portfolio. And of course, the reason why I concentrate those positions is that I have a very strong conviction about those stocks in particular, that they will deliver good returns over time. I like to call it diversified as well, because if you look through the 17 positions which I currently have in my portfolio, they are actually quite diversified when you look at the industries where they're coming from. So the top positions are currently in utilities, energy, and telecommunications. You have some consumer staples as well. And if you go through that entire list, there is really exposure to a range of different industries. Probably a bit underweight tech. That is something where I don't have a very large allocation to at the moment. But that is because over the last 2 or 3 years, I simply didn't see the great buying opportunities in those stocks.
Let's talk about desync. There's some areas of desync, but nothing very earth-shattering. I'd like to tie that into something that I was planning to talk about in the earlier section, which is your view on a popular investor adding funds. I see that you're planning to add funds in September, and you're going to try and go about that in the most copier-friendly way.
The desync we can maybe tackle first. The desync is a very interesting topic by itself on eToro, and I think maybe not 100% understood by everybody. So it's very good to indeed just shine some light on it every once in a while. I believe the desync is not a big issue in my portfolio. There are some positions which have grown a bit more than the rest, and there are some positions which have lost a bit more than the rest. But overall, I believe it's under control. First of all, because the portfolio positions have actually evolved quite, not in lockstep, but they have at least evolved at a similar pace. So there is not this one Bitcoin position which just rips everything apart. So that is a good thing. So I'm not too concerned about desync in the portfolio. And I'm also trying to manage it actively. When there are some profits to be taken or some losses to be cut, I try to do this in a way that you basically decrease the desync problem in the portfolio. So at the moment, I'm quite fine with it. And it should also be better beginning of September, which brings us to the second topic of adding funds, where for anybody who does not know it, I will be adding funds to my portfolio. And that will essentially double my funds in the portfolio by 100%. So I will double my own equity, which is committed on eToro. I will do that by closing all positions the day before, then adding my funds on the next day and opening all positions again on that day, which means that the copiers in the end do not have to do anything and they will stay fully copied. And that will also remove the desync problem.
Because when you repurchase, you'll be doing so according to the invested column proportions.
I'm planning to do it based on the value part, because that really then gives you afterwards the exact same percentage as it is invested right now.
Right. Okay. I always wonder about that because everybody's different. What you own compared to what copier from 2 years ago owns to copier from last week owns. So when PIs close and reopen their copies, they always do it, do you think, according to the value column?
I can't speak to how other people do it, But the approach which I'm having here is I would like to make sure that the exposure of the portfolio is the same on the 1st of September as it was on the day before, on the 31st of August.
Yeah. Okay.
And that is only
sense.
possible by reinvesting according to the value percentage and not the invested percentage.
One other thing I'd like to quickly mention is that you are copyable for the eToro minimum, which is currently $200. And you say, make sure to copy open trades. When adding to the copy, best to do so with at least 200 USD, so you can again copy open trades and stay closely synchronized. I've been thinking about this recently. That is surely a huge benefit to a PI. If they can be copyable for the minimum amount, then they can also make the case to copiers about topping up, that it's easier for them to top up and copy open trades when adding funds as well. Otherwise, if a PI has a $800 minimum, the copiers may either have to save for longer and top up less frequently, or they have to untick copy open trades when adding funds, which can lead to complications.
Yes, you are very right on that. And there is a couple of reasons why I decided to structure the portfolio in that way that everybody can copy with the minimum from eToro, which is $200. First of all, I think it's fair that anybody can copy also with a relatively lower amount than or the lowest amount which is possible on eToro. I think that's a question of fairness. And secondly, for me, it's also a question of simplicity. Because I realized, I think already during last year, that even though I thought I made it quite clear in my biography and in some other sources that the portfolio at that point in time should only be copied with, I believe, $500 minimum to make sure that everything gets copied, I could see that not everybody was doing that, because you can essentially see it if you go into a copier's public portfolio. You can see by the number of positions that not the right number of positions is open. Then you can assume that they did not open the copy with the recommended amount. And I saw that quite frequently. And I figured, okay, this is maybe something which is just something people do not want to deal with. So why can't I just lower it from my side so that it's not an issue for anybody? So that is when I decided to change those positions which were impacting that so that everybody can copy with $200. So essentially, at that point, I merged some positions into slightly larger positions so that they make up a larger percentage of the portfolio and therefore are also properly copied by people who are copying with $200.
Also easier to do when you have a concentrated portfolio, I suppose.
Absolutely, yeah. So that goes very well together with the strategy that I'm driving.
Okay. Positions of particular interest in your portfolio. One jumped out to me. Harley Davidson, a stock with one of the best tickers, which is?
Hog.
Yes, it's a hog. Okay, so this is an interesting one. Now, going from hog to bear, a bear might say, this is a dying boomer brand. Dirty old bikes for dirty old white men with nicotine-stained mustaches and lank ponytails. It's an industry in secular decline. It's a company that has no meaningful penetration in the worldwide market outside of the States. EU tariff rules, there's a 35% import tariff, means they can't sell in the EU. And now this most American of names is being run by some European. Not just a European, but a German. And he wants to dilute everything by bringing in millennial customers, selling out the good old boy customer base, bowing to this woke agenda that electric bikes are the future. God damn. Let's have a moment's silence for our fallen comrade. Harley Davidson is dead. Would such a bear give you pause?
Yeah, times are changing, even in the motorcycle industry, as it seems. Yes, you made a pretty good summary of the, let's say, recent company history there. So that was actually pretty smooth. In terms of stock investing, that's probably the reason why the stock is where it is right now, which means relatively low. From my perspective, as a non-boomer, I would say. The story makes sense because indeed times are changing and we all need to adapt our behavior to some degree. And for a brand like Harley Davidson, that also has impacts. And for them, that means switching to electric mobility in the end. And I believe that is actually a very nice story because the company is, in fact, currently even producing good cash flows. So that is already one thing which I like about the company. And I believe they have a good plan to use those cash flows, the part which they are not giving to the investors. I believe they're using it for good investments in order to push the company and the brand onto a slightly different track than before.
So just to be clear for the listener, Harley Davidson are spinning out Livewire, which is the electric motorcycle that they've been developing for years now. They're like really one of the industry leaders in electric bikes, certainly in the States. Are you only in Harley Davidson for the Livewire spin-out?
No, I believe in the current transition phase that both parts of the business, they make sense in combination. Because the old part, the way I see it, is still generating reasonable cash flows and might well do so for many years to come. And at the same time, you've got a pretty nice growth opportunity with the electric bikes because that really potentially, if they do it right, which I think they are doing, that opens up a completely new market for them. Quite the opposite of the clientele which you were describing before. That might be something which they are now approaching.
When is the spin-out going to happen?
I can't say for certain because they announced the plan last year and I believe they are progressing well with this, but I can't tell you the exact details about this one right now.
Okay. Yes, so the new CEO is a guy called Joachim Zeitz, previously from Puma, the sports brand. And I suppose it's a turnaround play for this boomer brand. He came in just at the start of coronavirus, terrible time. He's a pretty impressive guy, though. And as you say, they had good last quarter results, increasing sales and upping guidance. And they're trying to keep their core customers but expand into new lines and kind of redevelop the Harley Davidson brand, quite separate from Livewire. But let's talk about electric motorbikes. First of all, are you a biker? I could imagine you throwing on some leathers and heading down the Autobahn.
I do have a license, in fact, for motorbikes, but I haven't driven in 12 years, so I couldn't call myself a biker.
Okay, well, I've been preparing for this chat. I've been watching loads of YouTube videos all about the electric bike market. I ride a motorbike. That's my main means of conveyance. I'd love to have an electric motorbike. I think the next bike I buy is going to be an electric one. I hope, if I'm allowed to buy another motorbike, that is, and I don't have to, grow up to be responsible. So, the first thing to say about the electric motorbike market is it seems to be way behind the car market in terms of electrification. One of the reasons for that, I think, well, there's multiple reasons. One is, I think motorbike riders generally are a bit more likely to be petrol heads than the average car owner who just wants to go to the supermarket. And also, e-bikes have been where all the growth has been in this area to date. Bicycles with pedals and a battery that you don't need a license for. You can ride on cycle lanes. They sort of appeal, I think, more to people who would never have bought a motorbike in the first place. So the electric motorbike market seems to be really in its infancy still. Do you agree with that?
As far as I can judge that, not actively riding a motorbike, I would agree with that. And there is actually one curiosity about this, which you might be knowledgeable about as well. I read a report about riding, in fact, one of the Harley Davidson bikes, some test ride a couple of weeks ago. And obviously, when you ride an electric bike, it just feels different, right? Because the engine is different, let's call it that. But in order to simulate a feeling like it was a combustion engine, they added apparently some little mechanism which actually creates certain artificial vibrations. And I found that to be very odd, and the person writing that report also found it odd.
Yes, I did see that. I saw that. It wasn't Harley that did that. I don't think it was a different brand. You don't mean it was Harley, do you?
It might have been a different one. In my perception, it was a Harley, but it could have been a different bike as well.
Yeah, well, I've been watching guys doing reviews on the various bikes. The Livewire looks awesome to me. It's really, really nice looking bike. And I don't like the look of a Harley. I would never buy a big cruiser, but they look lovely, my kind of bikes. Livewire, it's a great name, Livewire. They're quite expensive. But yeah, as you say, they just take off so easily, and you don't even know when you've turned it on. Normally when you turn on a bike, it grunts, it vibrates between your legs, a feeling I'm sure we can all admit to enjoying. And then you take off and, you change gears, you feel it going through your body every time you change gears. To go from that to riding a largely silent machine that you don't know when you've turned it on, and then you take off and there's no pulsing through your body. It's very unusual. The guy who was doing the review also noticed that he was able to talk to his girlfriend throughout the journey, who was on the back of the bike as a pillion passenger. And he couldn't believe they were able to converse the whole way, because normally you're screaming, and by the time you get off your bike, your ears are ringing and things. So that was all quite interesting. From what I can see, the main publicly listed players at this stage in this space making proper motorbikes that are electric could be Livewire or an Italian company called Energica. They seem to be doing really well. They've got an incredible range of bikes, variety, good price point. But the problem with them is they're 72% owned by Ideanomics, ticker IDEX, a company that the market hates at the moment. Tons of shareholder dilution, unprofitable, burning through cash. Lots of risk factors, threat of delisting because they haven't provided the SEC with their 10Ks or 10Qs for the last couple of times, I think. You know much about that? You know much about Energica or Ideanomics? Well, if there's any listener out there that can make the case for investing in Ideanomics, I'd like to hear it. Is there anything, I haven't really asked you that much. I've just been talking about electric motorbikes.
Yeah, but that's great. It's fantastic to share your passion.
Getting back to the investment thesis in Harley Davidson, would you summarize it as new CEO, turnaround for the brand, it's already doing okay, he can turn it into something new, and it's all the added benefit of the Livewire spin-off?
Pretty much that sums it up. So I regard the current business, meaning excluding the electric bike business, I find the current business appealing by itself because I believe it still has a couple of years of generating good returns. And at the same time, I like that plan to really pivot towards the new reality, which is electric mobility. And in my perception, they have actually put up a reasonable plan, also financially, how this bet should be paying off.
Yeah, I'm quite interested in it myself now, I have to say.
Nice.
So you obviously think Harley Davidson is to some extent undervalued at the moment. I saw you on the Popular Investor Forum recently, hosted by Stephen Budgeon, Bees84. And one of the questions you were asked was to name a stock that's overvalued. And you went for Airbnb.
You are right. I listed Airbnb as one of my most overvalued stocks, in my opinion. I have been lightly following that company since their IPO. And I remember it IPO'd very high, at a very high share price. And I also remember that their CEO at the time was equally surprised by the first price they got on the market because they were interviewing him live at the time in Bloomberg. The company has since then lost about 50% in market value. And many people were now expecting the company to have a great comeback because large parts of the world are recovering from COVID, and there is an understandable demand for travel services. I do not think that they are able to capitalize on the trend to the degree which many investors still think they will. Because even right now, when we are already a couple of months into a reopening trend, they are still struggling to be profitable. That is the thing which I see when I look at the reports. And for that reason, I believe that there is more downside on that stock.
Do you know why it's called Airbnb?
I might have read about this, but you have to refresh my mind.
Well, B&B obviously stands for bed and breakfast. And the company began, these two guys, with a spare room, and they had an inflatable mattress, and they wanted to make a bit of money by renting out that spare room with the inflatable mattress. So it was an air bed and breakfast is what they advertised it as. Air bed and breakfast. Now it's Airbnb. It's like a household name.
That's a nice story, and it fits very well.
Okay. Okay, Ingvar, let's talk about copiers. Who should copy you?
I think really anyone who wants to build wealth over time can copy my portfolio.
And what's the right profile of someone to copy you? You said earlier that you think a lot of your copiers are new to eToro.
Yes.
That might suggest that there's a lack of experience there, or there might be a higher proportion of them who have a very short time horizon. And therefore, you're going to see them flee the more little specks of red in your monthly chart. Like you've already seen, because June was bad, quite a lot have jumped ship already. So what sort of profile of copier would you welcome most?
I think the way it works best for the copiers is, it sounds maybe a bit funny, but really a good starting point is to read and understand the biography. Because I believe if you as a copier identify with what is written in the biography, at least to a certain degree, then also the level of satisfaction and the level of expectation will be much better aligned. So since I'm saying, I believe it's the first word even, that I'm driving a long-term strategy, that is really something which I believe is good if copiers bring that as well, because then their expectations will be most aligned with what I'm doing in the portfolio. So anybody who is therefore willing to participate in the stock market over a prolonged period of time, meaning several years, that is what I'm building this portfolio for, I think those people will benefit most from the portfolio. I understand that there are other people who are at maybe a different stage in their investment journey who might just want to try it out for a month, or who might just want to capitalize on what they see as a short-term trend. And that is absolutely fine. But I'm also being quite clear that this is then, of course, everybody on it's their own decision. And I think I'm being reasonably clear in my biography. And as long as people identify with it, I think they will be happiest.
Okay. And what makes you so special?
I don't like to see myself as so special, but I believe what goes for me on eToro is that I feel that I'm quite approachable. And that is also my goal. That is the person I want to be on eToro and also outside of eToro. But of course, we are talking about eToro here. As I mentioned before, I am very passionate about investing, and I'm very happy to share this also with the world. And I have the feeling that many people on eToro are starting out with investing. And I believe it's very good if I can contribute with what I know to building their investment knowledge. And I believe that is worth quite something for people. I think it's nice for people to feel like they can ask pretty much any question investment related.
Do you have anyone who copies only you?
I believe there are some people who are only copying me. I can't say 100% because it also shifts sometimes. But sometimes I take a little sample and I look into a couple of public profiles, and sometimes there are people who are only copying me, but they also sometimes have cash left over and they might be copying somebody else in the future.
Can you describe an ideal copier portfolio that includes you? What's your role in that portfolio? And what type of PIs would you put around you?
I think in the end, it's really a highly personal question for people because everybody has their own circumstances and everybody might have quite different investment goals. So I believe there is a bit of responsibility which also goes towards the copiers, that they make up their minds as to what is my goal investing here. What I can bring to that, what I can offer my portfolio as, so to say, is that it is a stock portfolio which is designed to produce reliable returns over a couple of years. So I believe it could function well as a core portfolio for somebody who wants to have exposure to the market. Regarding other popular investors around me, I do not want to speak too much to other people's strategies because that is, I think they are in a better position to speak about their strategies themselves. But if you were to combine my portfolio with something else, some people might want to add, say, a bit more spice. So they might want to add somebody who is trading a bit more short to medium term. And that, of course, comes with volatility as well. So always at anybody's own risk, of course. But I think that is something which people might want to combine my portfolio as a core and then something else which gives them a bit of exposure to other asset classes. That might be a good combination for somebody.
What changes would you like to see on eToro?
So I've been with eToro now for almost 2 years, joining in August 2020. And what I like to see is that the company really takes in feedback. So I have myself also provided quite a lot of feedback over time, I believe. And you can really see that the company is making an effort to improve things which are maybe not running smoothly and also proactively trying to make the platform more attractive for people with different goals. So I think that is a good thing which they have going for themselves. When I look at the platform right now, one thing which I believe can be even stronger in the future is the feed. So if you look at the feed right now, the way I use it at least, it might be very different for other people. But the way I use the feed is mostly as output because I publish my morning briefs, I publish my analysis. And I really do sometimes also make the effort to try to go through the feed and find things which are interesting or valuable for me. And that is still quite difficult, I have to admit, because there is just a lot of things going on in the feed, and it's very hard to filter things which might be relevant for me personally. Now, of course, it's very difficult to make it fit to everybody, but I believe since it is a social trading platform, it would be really, really great if people had more customization possibilities to really shape their own feed and make it quite specific for themselves, filtering out a lot of the noise so you can really get the content which is relevant for you yourself.
Yeah, and one thing we stumbled across during this chat, as a sort of an aside, I was complaining about the little drag bar on the right of the screen that you pull to scroll down the page. I thought it was maybe just me, but I find that really small and narrow, and you often can't hit it with your little mouse cursor. And I find myself opening other things, and it's incredibly annoying. I wish that was thicker. You have that same experience?
I agree, yeah. That is something which could be a little bit easier.
I'm sure it'll be right at the top of eToro's priorities.
Certainly.
Did you go to the recent PI meetup in London?
I did.
Okay, because my next question was going to be, what other PI would you say you know best on a personal level? Prior to the PI meetup, would you have said, I don't know any of them?
Yes, on a personal level, I would have had to say that I don't know any of them. After the summit, I still don't know them very much in detail because it was a one-day summit, which was great to have. But of course, you speak to literally hundreds of people, so it's a bit hard to really go into detail with any particular person, and that's fine because the purpose is, of course, with the summit to get in touch with people, and I really appreciated that because I think this is really something which is going to help shape relationships over the next couple of months. So at the moment, I probably know them all equally little in some ways, but I'm looking forward to the next couple of months to build more on those relationships.
has that PI meetup started any sort of relationships? Are you more in touch with certain people more these days than you were?
Definitely, yes. So then, of course, there is a personal contact. And of course, we have now all collected experience to communicate digitally, but still personal contact is still something different. And I believe it just also sets a different basis for building something together afterwards.
You don't want to mention anyone else's names from the meetup or anything, like who you spoke to in particular? Or?
Yeah, pretty much through the board. So I spoke a lot with Jordan Boer. And then also I had a session which was co-led together with Neza Tram. And too many other names, which I can't remember. Of course, I remember them, but there are too many to go through.
Jordan is one of these guys that, as we mentioned earlier, unlike you, he didn't do the CC3 exam, and suddenly he's got a huge following, and he's still a red star. I think he's doing it almost around now, this week. So it's interesting that you had that divergence of approach when it comes to doing those exams.
Maybe he has an update on that. Yeah, I think his account also grew a lot, and I know that he was working on the CISI qualification, so I'm quite sure there's progress on that quite soon. Okay,
final question, Ingvar. What's the one question during this chat that you wish I had asked you, but I haven't?
Does that mean that you're going to ask me the question afterwards?
Yes.
I was, if I think about it, you probably would have asked me, where do I see myself at the end of 2022? Something in that direction.
Okay, consider that question asked.
Yes, no, this is really completely unprepared. But of course, I have a bit of a plan as to how I think the next couple of months will go. I am, of course, quite happy with the way the portfolio has gone so far this year. And I am very grateful and also appreciate that so many people have put their trust in me regarding copying and also following and commenting and engaging. So that is really great. And I think this is really something to build on during the second half of the year. So I think the crowd which we have so far on who are copying, who are following, that is really great. And I'm looking forward to another couple of months of either growing that community or engaging more with the existing community.
Well, on that positive note, let's leave it there, Ingvar. Thank you very much for engaging with us today here at the Copytraders Clubhouse.
Thank you very much. It was a pleasure being here.
That was Ingruc for you, listener. I imagine his story must give many PIs hope that their day will come and the stars will align for them to suddenly rocket up the charts. Congrats to Ingvar on his success, and may it prove to be sustained rather than fleeting. As I often say in these outros, only time will tell. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.